Good evening. This is Daniel Jacobs from TruLoan Mortgage. Welcome to our event this evening, Real Talk about Millennial Homeownership. We are going to let the attendees finish logging in. I see everyone coming in right now. We'll get started in a minute and a half, 2 minutes. We'll just let some of our other attendees get logged in. Gina, I just unmuted you, so if you want to speak, then we will have you unmuted. I think you have self-muted and you can unmute at any time. Okay, I'm going to go ahead and get started, and I apologize. Some of our attendees got a notice that the event was starting at 6:30 and some got it at 6, so I apologize if there was any confusion. We'll go ahead and get started now, and if we have some folks log in a little later, toward the end we can revisit some things that they may miss. But again, my name is Daniel Jacobs, and I'm really happy to be here this evening talking about homeownership. We've got a great panel. I just want to, first of all, thank our sponsors. We have Arch Mortgage Insurance and Costner Law that have sponsored this event, in addition to the Andy Bovender team at TruLoan Mortgage to make this event possible. The panelists will be, I'll be your host and moderator. Our panelists will be Tiff White from the Andy Bovender team at Allen Tate Realtors. And then we've got Matt Wise and Brenda Jarvis here from TruLoan Mortgage. I just want to kind of go over some housekeeping items, and I'll watch your email for a download link right as we end, around 7:30. This will be done, and you'll get an email. It's going to have 2 documents that are really important. One of them is going to be the Smart Guide to Home Buying, and that Smart Guide to Home Buying is going to it's just got so much in it that's going to be helpful. Checklists, little questionnaires, and it's going to take you through a lot of the items that we talk about tonight, kind of tell you step by step what the process is like, what to expect, what you need to do, what your lender will do, what the realtor will do. We've gotten feedback that this is very, very helpful for folks. The other document actually has a lot of interesting articles about buying a home. It talks about student loans. It talks about just different things, including some updated articles from publications recently that even discuss the whole concept of buying a home during COVID. So those 2 documents will be available. You can also request that we mail them in U.S. Postal Service to you. When you get the download and the email, you'll also have that option to request that. Now, folks, normally we like to do these events in a fun place. Pre-COVID, we would do these at breweries. One of our favorite ones to do them at was Legion Brewing. And of course, they've got 2 locations. We were using the South Park one. And it's unfortunate that we can't be in the same room doing it at a fun brewery with a beer and some appetizers tonight. However, we want to continue to support our local businesses, and we want you to still have fun in the home buying process. So any of you that want to get a pre-approval will get a $50 gift card to Legion Brewing. And if you schedule a time to do a pre-approval appointment, which we're going to talk about, learn about what that means. If you get on the schedule before Monday, You don't have to do the appointment. You have to go in, choose your appointment. It could be 3 or 4 weeks from now. You go in there and you schedule it. Then whenever you do buy a home, then you'll get a free lender credit for up to $500 towards your appraisal. So more about that later. So watch your email for that information as well. Before we get started though, I want to just say this version of Zoom is a little bit different than the one many of us are used to working with. We're used to using Zoom meetings. This is Zoom webinar. There's a few little differences. A lot of things are familiar and the same. One thing you'll notice, you only see the panelists and me, the moderator, up there in the pictures. So you don't see all the attendees up there. Don't worry, there's no problem with your system. It's just a difference with the webinar version. One of the things that I want you to know is you can click to make a comment, and we encourage you to do so. You can ask questions. This is going to be a very interactive session where we want you to ask a lot of questions. So there are a couple of ways to do that, and you can go into the Q&A. If you look, just take a moment and look for your little bar. For some of you, it might be at the top, on the bottom, on the side, depending on your laptop and what version you have of it. It'll say Q&A. You can click in there and ask a question, and we'll get to that. And we'll either answer it by typing it in, or we'll talk about it aloud. The other place is you can go into the chat. And the chat, you can type a little note in. We're going to practice that right now because I want you to get really comfortable putting something in for a second so that when you have a question, your question gets answered. That's our goal, for you to walk away having your questions answered by our panel of experts. It does look like we lost Tiff White. There she is. I knew she'd be back soon. The fun of doing these virtually. She doesn't disappear when we're in the same room. So, all right, so let's get started. Find that chat button, chat box, and I want you to just put A, B, C, or D in here. The average down payment among first-time home buyers is what percentage of the home price? Is it 10%, 6%, 20%, or 3%? What do we think? Got some 6 A's, 10, yep, B's, 6, A, all right, okay. So the actual answer is 6%. Listen, 80% of first-time home buyers put less than 20% down. So right away, we can debunk this myth of having to have 20% down payment. If we have questions more about that, we'll ask our lending panel as we go along. But 6% is the average down payment of a first-time home buyer. Now, we often talk to people and they say, gosh, I wonder if I should buy a house now or if I should wait a year. And, you know, what we like to do is quantify what's the cost of waiting. So if you put just 3% down, minimum down payment, and bought now, in a year, how much wealth would you have built through a combination of the home increasing in value based on recent historic average value increases and the amount of principal you pay down on your monthly mortgage payment? Would you build up $7,250, $31,490, $16,291, or D, $3,900? You can just pop in A, B, C, or D. What do you think the wealth that you would build over a year that you would lose out on if you didn't buy and kept renting? A, B, C, or D? We got a lot of C's. I see. That's the right answer. It's $16,291. So that, if you rented for another year, that's what you're not going to have in wealth in your pocket. It'll be in your landlord's pocket. Let's just extend that one out for 3 years. The number is big. It's $51,000. And folks, this is the reason that homeowners in America, over time, they build 44 times the wealth of renters. Because remember, every month when you're making your housing payment, you are building wealth. The question is, are you building it for your landlord or for yourself? And this really demonstrates how much you're lining the pockets of your landlord while you're renting. Now, typical cost. What do you think to have an exclusive buyer's agent as a home buyer? What does it cost you versus just using the listing agent? You know, the person's name who's on the sign in front of the house listed by, Susie Smith, whoever it may be. How much does it cost you to use your own exclusive buyer's agent? A, B, C, or D? 3%, 1.5%, 0, or 6? What do we think, folks? All right. Tiff, I'm gonna actually not answer that one. And instead, give me a moment.
Throw it to me.
I am going to pause that share. Yes, if you can answer that, and I will promise to change the screen so that everyone sees us instead of this slide momentarily. There we go. So what is it, Tiff?
I can tell you it's a big 0. There is no cost to use buyer representation. It is free. And the reason is, in the state of North Carolina and South Carolina, those commissions are paid by the seller. So, and that's something to note. It's very, very important when you are driving through the neighborhoods and you're looking at the homes that are for sale. And as Daniel mentioned, there's a sign on it. That person's name is representing the seller. By law, they cannot, they have their fiduciary duty to that seller, so they cannot tell you anything that might help you, protect you. And so that's why you need buyer representation, because by law, that's my job.
Yeah. So, sometimes we get a question, and folks, by the way, I want to encourage you to go into that chat feature and pop in questions as we go along. You can also use that Q&A feature. It's also really, really great. So we want this to be an open communication and a whole dialogue on whatever your questions are. But Tip, to your point though, we have had some folks ask, okay, I get it. You're saying that's built in, but if I go to the listing agent, then can't they sell the house for less because they get half and you're going to get half, but since you're not going to get half, don't they just discount it?
Well, and thank you for bringing that up, because that's called dual agency. And so what that means then is that listing agent, could she possibly give up some of her commission? Possibly, but doesn't always happen. They signed a listing agreement for a certain amount of money. But going back to the dual agency, what that means is that agent is on the fence. And so what she is someone who just messages back and forth. She cannot protect the buyer. She cannot negotiate for the buyer. She cannot tell the buyer anything other than material fact. And so what ends up happening is actually the buyer loses out on plenty more money than what they're saving by using the listing agent, because they haven't negotiated up front. They haven't been helped during the second negotiation, which is repairs, during that due diligence. So it's honestly, it is the opposite of a cost savings.
Gotcha. Yeah. Okay. So tell me a little bit about, so you started talking about the repairs in that second phase. So let's just take a step back.
Yeah.
I'm a new first-time home buyer. Where do I start? What's the sequence that you recommend, and then kind of walk us through what that process looks like?
Sure. Well, it starts with you. It starts with you all. So that conversation has to happen, so everyone knows what they're comfortable with, what price range they're looking for. Once they get that from you and Matt and Brenda, then I can step in and we will talk about criteria, area, bedroom count, what feels right to you. And then I set you up on a great search, a very accurate realtor search, nothing like Zillow or Realtor.com or Trulia. They're good for a lot of reasons, but they're certainly not accurate. And so you get set up on mine. And then we just go out and start looking at homes. And the more you see, the better, because then you start finding out what you like and what you don't like, and what you want and don't want. And then once we find one that is a great fit, we make an offer. And so again, that's where you all come in, because you would have had a pre-approval. In both states in our area, you certainly need a pre-approval to make any offer. So we negotiate an offer. Lots of times there is multiple offer situation in our very strong market. And once we are under contract, In North Carolina, there is a due diligence time. So Daniel, that's what we were talking about. As far as another negotiation for repairs, that's when you get your appraisal, all sorts of wonderful things that need to be buttoned up during that time. And I help guide you through that, as do you all. And it is a very seamless process, as long as you're with people that know what they're doing.
Sure. Yeah. So if you don't mind, I'm just going to pivot over here to Matt, because you already brought up this concept of a pre-approval. I mentioned it earlier, and we're highly encouraging folks to get pre-approved early with some incentives. And I think you kind of just touched on why, because you have to have a pre-approval in order to make an offer. So Matt, will you just kind of walk us through, what does it mean, a pre-approval?
Sure. The pre-approval is really the foundation of the entire process that Tiff's talking about. This symphony that goes on behind the scenes, it all is based on that initial pre-approval that we as the lender do up front. So, to take a step back and look at that, if you've got, an extra $300,000 or $400,000 in cash sitting around in an account and you want to go and buy a house, then you don't need a lender's assistance, in most cases. But for the majority of people, you're getting a mortgage loan to help finance that house. And so in order to be in the position to even make an offer on a property in like Tiff said, this hot Charlotte market, you've got to be fully approved up front. And that means that we as a lender have to take a look at a variety of different criteria and analyze your ability to get the mortgage loan to buy the property that you want to go out and buy that meets the needs of you and your family. So we're going to take a look at things like the credit history. We're going to take a look at your debt to income ratios. We're going to take a look at the assets that you have for down payment funds, what programs and products meet your needs the best. We're going to go through that discovery phase up front, because in order to get out there in the market and get start looking at houses and start making offers on them in this very competitive market, we have to have your financing solidified up front. And that means not just taking an application. There's a lot of technology that allows people to think that they're, sort of pre-approved by just going on an app and putting in some information, and that will not help you in this market. We need to get some documentation up front. We need to do our job as loan officers and originators to verify the income that you make, to verify that there are not going to be any surprises along the way, because as we are orchestrating this symphony of events that are going on from contract to close, the last thing that we want is any surprises. And so the pre-approval process, is what we do to make sure that there are no surprises. Because if there are surprises along the way that we didn't discover up front, those are the kind of things that cause you to lose money. Those are the kind of things that cause the transaction to go left. So the better job that we can do up front and the earlier we can get involved with any client is for the best. And, that's why we consider it the foundation. Tiff can't do her job, and you can't go out and get a property in this market without having the full pre-approval up front. And so that's why it's the foundation of everything that happens.
And you know what, Matt? So one of our attendees said, listen, at what point should I get pre-approved? And do I need to know the exact amount? So I think what they're asking is, do I need to know exactly to walk us through when we do the pre-approval, how do they know what they're asking for pre-approval, and what do you and Brenda do to help them in that way?
So when we do the pre-approval, we are going to go through the different loan programs that exist out there in the market. We're going to walk you through all the conventional loans, all the government programs. We're going to walk you through first-time home buyer options, all this that's sort of customized for whatever your situation is and whatever your job, however you get paid, whatever your debt situation, all those things. We're going to take a look at that comprehensive picture. But the truth of the matter is, we're going to discover what your sort of range is, what your max limit, what we can do and what we can't do. And we want to establish that to set that bar. That's one of the things we want to know. And that's one of the things people want to know. What can we be approved for and what can't we be approved for? And in a lot of cases, that number becomes irrelevant, because let's say that we can approve you for, a $500,000 house, but you don't feel comfortable with a payment of any house that's over 350,000 or 200,000 or 150, whatever the case may be for your family, you may not feel comfortable. So we're going to work off that number. So it's really specific to your situation, but we're going to determine what the budget allows and what approval allows. And then we'll go from there working with you on what you allow, because at the end of the day, we want you to be comfortable with three things. And this is one of the things that I preach to everybody that, you know, comes in to meet with us. We want you to love the property. We want you to love the amount that's coming out of your bank account each month after you close. And we want you to love the amount that's coming out of your bank account when we go to close. And when you have all those three things and you're comfortable with all those three things, you should buy that house. And so you're going to tell us some of those factors as well.
Right. Yeah. You know, one of the questions that has come up too is about credit scores, and like if they know what their credit score is because they have Credit Karma, can we just use that? So Brenda, perhaps you can talk about credit scores and what that means and how they vary and what's reliable.
Sure. So different industries look at an individual's credit differently. Car folks look at the same person's credit differently than mortgage industry folks and credit card people, because there's different criteria in there that we find important. So so when you look at your credit score on Credit Karma or something, that isn't set up based on the things that mortgage folks think are important as far as credit goes. It's typically set up for credit cards.
Mm-hmm.
That's what you're going to see. If your score is that and you went to apply for a credit card, they would see that score that you saw more than likely, or something really close to it.
Gotcha.
Cars, clearly, if you had a repossession of a car on your credit and you were going to apply for a credit card, they may or may not give as much weight to that as another car dealer, because that's exactly what you're doing. Same with somebody with lates on an old mortgage or something. So that credit score typically does not look the same as what you see when you look at Credit Karma. That's another reason why it's important to come in and fill out an application. Let us determine, based on the credit report we're going to pull, what your credit score is and what we're going to use to qualify you for.
Okay, so pulling new credit is important. Don't get too caught up in what's there. I like to say if you're looking at Credit Karma over time, it's a good barometer of whether your score has an upward or downward trend, but don't get caught up of, oh, I don't think I qualify, or I've got, you know, perfect credit because this score is that. So to Brenda's point, we do have to look at that.
And one more thing, a lot of people get very nervous about having their credit score pulled.
Mm-hmm.
So
you hear that.
People ask me, if you pull my credit, is it gonna affect my score? And I can't tell you absolutely not to that answer. It depends on a lot of things, but when you're shopping for things like the credit industry has told us that if you're shopping for something like a car or a house where you're just gonna buy one of those things, typically, you can shop and it's not gonna affect you. You can go to 2 or 3 different lenders.
Within a 14-day period, I think, right?
Within a short period of time, 60 days. If you go and fill out 5 credit card applications, you can say yes to every one of those, and that could affect your credit standings if you went and ran up all those credit cards. So that's why pulling your credit all those times with different industries, that could affect your credit.
So we have a question, and I'm not sure if I fully understand it, so I'm gonna rephrase it, and if the attendee feels I didn't get it right, and just pop in that clarification. So does the pre-approval amount depend on whether I'm buying a new property? I think they mean like a new construction versus an existing home. And actually, Tiff, I'd love to just talk about new homes, you know, because we, you know, how does it differ when you're looking for an existing home versus a new home? And do buyers still use you, or do they just go into the show house and talk to the person that works for the builder about the house?
Right. So you will need both. You will need a pre-approval for new construction, as well as it's called a resale, a home that's already existing.
Right.
So it's just standard. You just need that. And
Right.
and I also like to say that you need a lender who is accessible and who is knowledgeable. because this market is extremely strong. It can be fast. And so if we're writing up an offer on a resale home and I need to talk to Daniel or Matt or Brenda, you can't tell me that, you're gone for the weekend, and so that is why we align ourselves with each other, because we are very familiar and similar with our accessibility. So I just wanted to say that. But circling back.
I think, folks, what Tiff just says, none of us has a life. That's what I heard. But,
That's all right. Our clients,
right?
Is our life.
You enjoy doing it.
Is our
So,
life.
but to your circling back to the new construction, it is the same thing. Those salespeople at the models are lovely, nice, informative, but they represent the seller, who is the builder. So, for instance, they will not tell you that the power line that is behind that lot might affect your resale. They actually cannot tell you that, but I can tell you that. And so throughout a new construction process, it's actually extremely important. It's a 6 month to 7 month marriage, if you will, where I'm walking the lot, making sure there's no objections, again, for resale. I'm always looking resale. And then, design criteria, design ideas, plans, I work with buyers every day and I work with sellers every day. So I have a very good insight as to who wants what and what the needs are and what the market is demanding. So, but anyway, yes, we will need a pre-approval for both. And we'll also need representation. A buyer needs representation, period.
Okay. And again, even when you're going to buy from a builder, I mean, that's built in. You still, going back to that question that we started with, it doesn't cost extra to buy a new construction home by having it on my side, right?
Zero.
Okay. Yeah. And I will
Daniel,
as an additional.
One thing we should mention on this topic, when it comes to new construction, a lot of people, think that they think kind of the myth, like if I go and talk to the selling agent there, I might be able to get a good deal, this kind of thing. When it comes to new construction, especially in developing neighborhoods, there are no deals. They have to protect their comps. They're selling a house. They can't really give you a discount on that next house that they're selling. They've just sold, X amount before that. That's an important part of their structure. There's not really deals to be found there. That they're setting the price and they can't have their comps go down. So you might have choice on your options, but you're not going to get like a discount by going to the direct.
Matt, help us out with your lingo to explain comps.
Comparable value. So any house that you're buying, okay, so if you're buying a house, let's say in my neighborhood, Plaza Midwood, and you're buying a 4-bedroom house in Plaza Midwood, 2,000 square feet. When you go to buy that house, that the market is set by the comparable values of similar properties that have sold in the area. And the same thing is true for new construction. If you have a new neighborhood and they're selling, let's say 100 houses and they've already sold 40 of those houses at a set rate, they are not dropping their price because it impacts the previous people that they've sold in the past, and it impacts the people they're selling in the future, and that's important to them. So there are no discounts to be had there. It's an important part of new construction. New construction can be great. It can be a great fit. A lot of times, maybe not for the first time home buyer, and that's just what we see. But a lot of times, second and third houses, new construction, something like that. But because it has its own set of, it's its own set of quirks that come with new construction. But people need to know that.
Tiff, let me just ask you as a follow up to that. We haven't talked about COVID. Okay, so I know a lot of people have questions about what's driving home values and what is the impact of COVID on the market, and I kind of combine them because they might be somewhat related, maybe not, but can you just walk us through what's driving home values, what's the general trend, and then kind of talk about COVID and how it's impacted the home selling and home buying process so that everyone understands that part of it.
Sure. Well, in Charlotte, and I can speak for our local market, there is a lack of inventory. So that just means there's not enough homes on the market currently for the demand. And so that is certainly supply versus demand. Also, nationally, our rates are terrific. It is the cheapest money you can buy. And so that is that is very, very enticing for, and as it should be for any buyer. So with those two things colliding, we just have it's a very strong market. And so it can be a little competitive, which is why you do need your ducks in a row. You do need a pre-approval, and to be very well aware of where you are with your budget and feel comfortable with it. You need to, be in the right mindset to go forward on a home, and which is, and I know Daniel and Matt and Brenda can speak to that as far as money savings versus renting. Honestly, you are paying someone's mortgage, just not your own when you're renting. So there's a lot to why it's so wonderful to buy. And in Charlotte, we're just seeing such an increase in value. And so everyone just wants to come here, it's the secret is out. Everyone loves the Carolinas. And so, yeah, there really is. And so now with COVID, the impact that we are seeing locally is anyone from these other markets, these other climates that might have had Charlotte or the area, North and South Carolina, on their radar in the next couple of years are certainly cashing out in those very populated areas and coming here. And so that is adding to the mix. As far as showings, we certainly follow CDC guidelines. We have masks, we use sanitizer, we social distance, but everything is going very smoothly, and we are showing every day, and we are selling and listing every day. So it's kind of the same process as usual.
Right.
Those guidelines in place.
Of course, yeah. I think at the very beginning during the phase one, it was a little different, but it's kind of gotten to where people have no problem going to look at houses. You've got all the safety protocols. If someone's interested in buying, they shouldn't feel concerned about starting their search now because of COVID, given all the protocols that are in place at this point.
Right. That's exactly right. Every day, people are buying and selling, and everyone is being very safe, but is a lot of good things going on in our market. Very strong.
Hey, Brenda, we have a question here from Brian. What about spouses, maybe that have different credit scores? Will the loan officer weigh those credit scores differently? So yeah, let's talk about that. Which credit score we use with different spouses and such.
So
and I shouldn't say spouses, I should broaden that to be really, that was the question, but co-borrowers. Because
if there are 2 people or 4 people on an application, because you can have as many as 4 people on an application, whoever has we pull all 3 scores, and then we have the middle score of the medium score, the middle score of those 3 is the determining score for that individual. And then the individual with the lowest middle score is the score that we use to underwrite that file, to determine the credit score for that file. So if there are 2 borrowers and one has great credit and one has okay credit, we are going to underwrite that entire file based on that okay credit score of the borrower with the lowest score.
Right. So in other words, if one borrower's middle score is 750 and another one is 680, we're going to use the whole file as if it was a 680.
Yes, that's right. And so just to let everybody know, what does that even mean? What does that mean to me? 680, 740, what does that even mean? It means there's a couple of things. One, it can mean the difference in the type of loan you get.
Right.
There are conventional loans, there are government loans. Conventional loans have a minimum score. We could go all the way down to 640 on a conventional loan. However, unless you have 20% down, you also have to qualify for mortgage insurance, and that has some credit score requirements. And oftentimes, the qualifications for a conventional loan are they're a lot tougher to get if your credit score is low. You either have to have a big down payment or a lot of assets in the bank or something to overcome what the underwriter is seeing as not necessarily a fantastic credit score history. But that group of borrowers may move over into a government loan where the credit score requirements aren't as stringent, and
Right.
nor are the down payment requirements. So, you can have as little as 3.5% down. You can have as low as a 620 credit score, and you can still qualify for a mortgage. Now, the cost of that mortgage, unfortunately, is a little more. If you're a bigger risk because of what we see in your credit history, then your interest rate might be higher than somebody who has a great credit score.
But just to clarify, Brenda, you talked about if you have a weaker credit profile, you're probably gonna fall into a low down payment, FHA, government loan. And if you have a weaker credit profile, maybe conventional loans aren't the thing. However, and you talk about big down payments, I just want to clarify. If you've got a moderately good or really good credit score, going conventional, you can have as low as 3% down. Is that correct?
Yes. 3%.
Yeah. So I just want to make sure that it's not that you always have to have a big down payment for conventional. It's kind of a multifaceted. If you've got weaker credit, you're probably a better fit for government. If you've got stronger credit, you go government. And on that topic, Arch Mortgage Insurance is one of our sponsors, and they make it possible for people to put 3% down on a conventional loan. And I know, Matt, you've got some stories about where mortgage insurance allowed people to put a lot less money down, keep money in their savings, and we're really surprised at how low that monthly mortgage insurance premium was ever since we've had the introduction of risk-based pricing on that. Can you just touch on that for our attendees?
Yeah, the thing that I always tell people is do not be afraid of mortgage insurance. It's what allows you to get into a house, and you should embrace it. It's never been more affordable than it is right now. And when I usually sit down with clients and walk them through their options, it is really eye-opening for them, because they see, oh, wait a minute, it's not as bad as I thought. They've heard maybe for years that, you got to do everything you can to avoid MI, not necessarily in this market. Let me give you a great example. You had a young lady who was just a wonderful client that came to us through one of these events, and she was fantastic. And she had done everything that she needed to do and really saved up 20% for a purchase of a new house, thinking that she had to do that. When I sat her down with the options, she was going to exhaust her savings account to put that 20% down. And when I sat her down with the options, she realized that by holding on to tens of thousands of dollars in her savings account, it only cost her $54 a month. So when I laid it out for her, she saw very easily that no, especially through the COVID, experience, we've all learned that nothing helps you sleep better at night like having savings in the bank. So she kept her money, she put a minimal down payment, paid the mortgage insurance, and it was a huge win for her. And I would tell anybody that, your mortgage insurance options are there for us to discover. And that's what allows you to get in the house and allows you to be a homeowner and allows you to start taking advantage of being in this wonderful market that we all are lucky enough to live in, and be a part of some of that appreciation and grow that wealth. So don't be afraid of it. It can be your best friend.
Yeah. And listen, folks, we're talking about a lot of technical things, a lot of numbers.
Yeah.
I don't want any person on here to feel like you need to leave here feeling like you're your own loan officer, okay? You do not have to pre-qualify yourself. That's what we are here for. It is kind of like, every loan's like a snowflake. They're all a little different because everyone's coming to the table with all their individual circumstances. We analyze every one of them on an individual basis in this process. I just want to make a...
Daniel,
stop. If you don't want, I want to stop and I want to make a quick announcement. We've had some people join recently. I apologize. There was a little mix up. Some people got a starting time of 6 and some got 6:30. We've never had that happen before. We've done a lot of these. For that, I apologize. So for those of you that just joined in the last few minutes, we did have a lot that we've gone over already. Two things. One, we will send out a video and a YouTube link for this, so you can go back and catch up on that first little bit. Plus, one of the other things we talked about is we we're going to send out an offer to do a free pre-approval with you and give you a $50 gift card to Legion Brewing to go enjoy on your own time, since we're not able to be there tonight in person. So I apologize for the interruption and repeating that for those who you were here earlier, but it was no fault of their own. So Matt, what were you going to say?
I want to just circle back to Brian's question that Brenda was talking about earlier. I just want to make an important point about that, what I think he was asking about. Sometimes two borrowers can come to me, and Daniel, you made a really great point. A lot of times it used to be married couples. We see more and more unmarried couples than ever before buying houses. In fact, with COVID, many people are pushing off marriage and buying the house now and having a wedding, at some year in the future. So that's common. But when we sit down with you, one of the things we're going to do is stress test what we can do and what we can't do. And one of the things that we're going to do is optimize the loan to save you the most amount of money. So let me give you a quick example. Two people that make, sort of really, that they're making good income, and they qualify for the loan that they want, maybe with one income. One has a higher credit score, one has a lower credit score. We're going to optimize that loan to save you money. So if we're going to use that higher credit score, eliminate that person from the loan, do it in only one person's name, have that second person on title as being an owner of the house. That's exactly what they want anyway. We're going to maximize that loan for savings to get the lowest interest rate. That's the kind of things we're going to structure and do on the loan. So I think that may have been what he was trying to get at also on there. So yeah, that's one of the things we're going to do. We're going to try to save money along the way. We're going to try to optimize the loan so that you can hold on to the most amount of money, and we match up the loan that's best for you. And if we can do that, we'll do it.
And
so I just wanted to mention that.
And on that topic, one of our attendees says, "Hey, can you buy a house in a partnership with friends?" Now, when he says in partnership, I think he just means like friends getting together and buying it, not forming a partnership LLC, which is a different thing. But yeah, right. It doesn't matter. There's no relationship requirement. It's just two human beings who want to buy a house together, right?
Yes.
Okay. All right.
Speaking of that question, Daniel, for the people who just joined, can you let them know where they can ask questions?
Yes, thank you. No, real quick, if you joined recently, there's a chat spot where you can ask questions in the chat, and then there's a Q&A. Q&A is really the best place, but you can do either way. We are watching both lists. So you can just go type that in and we will answer your question. I want to get to another one. Matt, you said about, different quirks related to new builds and something about new and why more experienced or second and third home buyers would be more interested in them. And then, and so he was just kind of wanting to know a little bit more about what you meant by that. But also a question, and you and Tip might both want to pop in on this. Someone said, "Hey, isn't it better for resale value if I buy a brand new house instead of starting off with a used one?" Maybe Tip, you want to just handle that one?
Well, I think in our market, our homeowners are doing well, regardless of if it was new construction or resale. They're two different animals. Obviously, for new construction, you start with a piece of dirt and you choose a plan, and then you just watch it happen. And so you choose everything. You choose the flooring, you choose the paint color, you choose the roof, and so you really have to stick with your budget. You have to be super disciplined, and maybe that's what Matt was talking about a little bit. And I'm there to help you with that. But it
you can have runaway extras as you go along. I'll do this upgrade, I'll do that upgrade, and now you've gone through your budget.
That's right. And so, and the on-site salespeople who again represent the seller, who is the builder, they do a phenomenal job of making sure that all the different upgrades that are possible. And so it is just a longer process, and there are inspections and there are meetings, and but you can certainly, it's not a bad process.
Sure.
It is a fun process, just like when you're looking for homes that are already existing. It's just a different animal. And so I can help you with both, and so could Matt, Brenda, and Daniel. It's just, there's different expectations.
Well, so let me just go back to the resale value. So there is one, what I've always thought, and please tell me if you think I'm not saying this right. If your expectation is to own the house for a short period of time,
okay,
and you go in early in the phase and you are trying to sell an existing home in a neighborhood where the builder's still building them,
Yeah.
that can create resale problems, right?
Well, so that is one of the things that I always ask when I do accompany my buyer clients is I ask the salespeople, how long is your build out in this neighborhood? Because if it's finishing up and there's a year left, that's good knowledge. And if it's 10 years down the road, that's also very good knowledge, because like you said, it is extremely hard to sell against a new construction homes. And that will be your main competition. So if you do purchase a home and 2 years down the road, you get relocated and they're selling the same plan in the same phase and it's brand new, and those builders have deeper pockets and they can give you many more incentives than you can give the buyer, it's very tough. And so that is,
the bottom line is they're going to deliver something with choices for everything and new. Your stuff, it's what it is and it's used. So that competition becomes difficult, right?
You're right. It is trickier. And so that's an expectation you need to be aware of. And
this
so
is one of the things, folks, that the reason you want that buyer's agent, like we said earlier, doesn't cost you anything extra, because Tiff's going to watch out for you. She's going to ask those questions. She's going to ask you how long you plan to live there, how long the build outs are, and really dig into that. Because you don't want to make a decision that you later on regret for information that you could have known but just didn't know to ask. Right. And that's why you want to have that right person on your side. So I think that's terrific. Let's see. Okay, now listen, I watched the debate the other night, and we are not going to get into anything that has to do with politics, but we do have a politically motivated question. Does the coming election, will it affect prices? Is it wise to wait till results are out? I'm not even sure when the results are going to be out. Touchy topic, but in general, you know, I know that all of our economists that we follow as mortgage professionals are saying that mortgage rates should really remain very steady for the near term and the foreseeable future in the next year. But Tiff, does Alan Tate, does the Bovender team have a perspective on this that you think is good advice for potential buyers?
Well, it is the same. We are hearing the same, that rates should be stay consistent in the next year or two. However, no one has a crystal ball. Right. And I can tell you, even if it does go up slightly, historically, these rates are ridiculous. I mean, I'm dating myself, but my first home, I bought at 8% and I was jumping up and down.
That
was a good rate. Tiff, that was a good rate.
I tell you what.
That was a good rate.
Yeah, 6.5 undulated. Yeah.
Yeah. So these are still, you know, wonderful rates. And it's just an awesome time to buy in on this. We are so lucky to live where we live in the time we're living, and to be able to capitalize on this would be absolutely to anyone's benefit.
I think I did a calculation a few days ago, and I was looking at the difference between a 3% rate and a 4.75% rate. And for the particular client, I mean, it made something like almost $100,000, $90,000, I think was the number. Additional buying power. So for the same payment, they could buy an extra $90,000 of house. And you know, that's a big difference. That changes the neighborhood. That changes the finishes. That changes the size in the bedrooms. It's a big deal. I've been doing this 24 years, and I mean, the fact that we have rates that some clients are getting that start with a 2 or a 3 is something I never thought. I would have laughed at you, you know. So it does create a really, really big additional buying power. Someone said recently, you know, about discounted houses, and I heard a person say, "What are you talking about? Your interest rate is your sale. That's what's on sale is interest rate." So it makes a big difference.
The money's on sale.
Yeah, money's on sale. That's a good way to say it. Yeah, that is so true. So I wanted to ask earlier, Tiff, you talked a little bit about the buying process, and one of the things you said was inspections. You mentioned that. So Can you kind of just, let's go back, because we went back to the pre-approval and the offer process and such. You know, in terms of inspections, what does a first-time home buyer need to know, and how does that impact the buying process? Because this is one of the big differences between renting and owning, is you're responsible for the condition of the house afterwards. So talk to us about that.
Sure. So in North Carolina, like I was saying earlier, there is a due diligence time where you are under contract. Both parties have signed the contract, and it's been ratified. And so we negotiate up front that amount of time that's due diligence. So it's under contract. No one else can buy it out from under you. And this is where we do all of our investigative work. And we do a home inspection. Of course, we will do a termite inspection, depending on the home. And the age of systems, which would be your HVAC, roof, electrical, the big ticket items, we can do additional inspections. I have wonderful relationships with these inspectors. That's just, again, just being in the business for quite a long time. And so we go through that process, and then we get the reports back throughout this time, and we decide on a request. We request what things could be fixed by those sellers, and then it's negotiated. And so oftentimes, most times when you're with an agent who knows what they're doing and has been at a lot of inspections, you could predict some of the things that might come up on an inspection. It's just part of the process. And again, you have another time to negotiate these things with the seller. And so after that due diligence time, however, we need to have everything buttoned up, because after that time, that's no longer a time to negotiate. So is that what your question was, Daniel?
Yeah, no, I think that's terrific. And,
Yeah.
Brenda, we've got a question. Stephen wants to know. He says, I've been working with a large bank to get a pre-approval letter, and boy, it just seems like a long process. And he wants to know if we have any other lenders we can recommend. Which I will do that right now. The name of that company is called TruLoan Mortgage. We're right here. But the more important question actually is, how long does it take to get a pre-approval letter? Brenda.
So it really, it's like that snowflake. It depends on the borrower, but typically I can put together a pre-approval as long as I can get some information, the documentation from you, the borrower. I can put that together in about an hour.
So what documentation? That sounds like the fine print. So what do you need?
Right. So I need to see, so that, there's the 3 C's of, underwriting a loan and getting an approval. And that would be credit. So I have to pull your credit. Then I have to know the collateral, which that's the appraisal. But I need to know your income, where you work, and how much money you have. And
So
then
pay stub and a
correlate
bank
to
statement?
what it is you want.
Pay stub and a bank statement, and if they're self-employed, tax returns, right? Pretty much.
Yes.
So, Stephen, if you've got those readily available, you get your pre-approval same day. Is that right?
Yes.
Tiff, can you
yeah. I've done 2 pre-approvals today, like from start to finish. Application, we have the docs, and letters are issued. It is not uncommon. That's what we try to do. We want to get you out there looking at houses as quick as possible.
Folks, this is the difference, and this is why we created TruLoan Mortgage. Okay, so if you look at our sign or our logo anywhere, it says the lending experience you'll love. I've been doing this for 24 years. Matt's been doing it for 20-something years. Brenda, we've all been doing this a long time. We used to manage a large national platform of a mortgage company, and we decided we were done with the red tape. We were done with the subpar experience that large companies deliver to their consumers, and we felt like they deserved more. So that's why we launched TruLoan Mortgage, and we spend all of our days and weekends and evenings making sure that we live up to that promise to make it a good experience for you and an easy one. And I do encourage you to check out our website and look at our customer reviews, because the things that people say are so heartfelt. We could never have sat there and the marketing team and written these words better than they do. And that tells me we're delivering on that. So I know we're in a big banking town. Yeah. We're the antithesis of a big bank, and we just get it done.
I'd like to add to that, Daniel. So the bank that Stephen is mentioning, you know, it's a well-known bank here.
Well-known?
We do it. What now?
It's well known.
It's well known.
Yeah.
We do a lot of loans. We do a lot of loans, and we do a lot of business with people that even work at that institution, and including executives. We've recently closed on an executive at that bank because she needed to buy this property. By her contract, she needed to complete that transaction in 27 days. And the well-known bank went ahead and told her, even as an executive, that they cannot close that loan in less than 30 days. So not only did we do that, we ended up closing that loan earlier than their plan was, because we are a small boutique lender here. We're a lot more hands-on. We have a lot more control over the process. We are not a bank that is full of the whole country's refinances right now and can't get anything done. We focus on purchase transactions here in our local market, and that's what we do best. And we partner with great realtors like Tiff. And another thing I'd like to add that Tiff mentioned earlier that I'd like to remind everybody: when you are purchasing a house, what you're looking at on this screen in front of you is a huge advantage. You have a team that's already put together and ready to go to work for you. And Tiff mentioned an important part of that team is that when you work with a team like us that knows that work in the local market, that are closing transactions every single day, that have seen everything that there is to be seen and know how to react to it along the way, you're not just getting us and experienced professionals that are used to working together and communicating with each other all the time. You're getting all our vendors too. So that means that all these third parties that we have to reach out to, you're getting a good price on those. You're getting people that are trustworthy and dependable. We have all those connections also here in the local market. And you'll see when you go through the process, that's a huge component that makes it smooth from your side. That's why we get to the end and have those 5-star reviews, because we've made sure that along the way, everybody was communicated with, all the work got done, and you get to focus on doing your job, and you get to show up at the closing, and then we get to celebrate when you get the new house. So, I mean, it's an important point that needs to be said.
And I want to piggyback on that. You mentioned we closed that loan early. We talked about 30 days and all these different things. Tiff, I've got a question for you. I want to make sure that folks know what the time frame is on these things. So let's say you spend your couple hours to get yourself pre-approved, okay? Earlier you mentioned having an accurate realtor search versus Zillow. I want to understand why it's more accurate. What makes that better? And then I've got to follow up on that. Go ahead.
Sure. The realtor search that I can put my clients on is much more timely and much more accurate. So for instance, once you're on my search and I plug in the criteria that we're all looking for, 3 bedrooms in Huntersville or in Plaza Midwood, ooh, hello. Sorry about that, guys. I get excited. Once I plug in that criteria and I just need your email, literally within seconds, once a new listing comes on the market, it is sent to you. It is automatic. And so that is not the way the third-party sites go. That information that is on that my automated search is exactly what we go off of. And Zillow and again, I'm not trying to down them. They're good for the pictures and the platforms are very user-friendly, but they might have bedrooms off. They might say it's under contract or available when it's not. Square footage is commonly wrong. And so it's just not reliable.
Well, and then listen, we talked earlier about how robust the market is. A lot of homes that are within reach for a lot of first-time home buyers are selling very quickly. So if that house goes up for sale at 8 in the morning and they don't see it on Zillow for 48 hours and it's new, it may have already been sold, but on your list, and if they are set up for a 9 a.m. email, it's going to be in that email, right?
Oh, right. And the way I like to set it up is any time. And so if it goes on the market at 11 o'clock at night, you will get that email, and I get it too. And
so it will update them as it comes up, even better.
Live, yeah.
In real time.
Love it.
In real time. So that way I can actually make that 8 a.m. appointment and be the first one there. and already communicate with that listing agent. So
I think we have a client that after 3 tries with another realtor getting there too late because it was never available, you
Right.
took her in that morning and got her that house. So I appreciate that. All right, so let's go one
Accessibility.
step further on the timing, okay? So now you get your pre-approval, you got your drip thing coming through to find houses. Even if I'm not necessarily looking for tomorrow, I might be waiting to do it by the lease ends in 4 months. But let's say in 17 days, okay, on that day, I find a house and we go in, love it. You have an offer out because Matt just updated my pre-approval with that address, okay? And you know we're going to go into multiple offers, okay? Meaning the listing agent said, we've got 3 other offers coming. We're going to boost that offer with a video pre-approval in addition if we need to. We're going to do everything we can to help you get that. We go under contract, all right? From that day forward, how long does it take before I own that house?
well, it's negotiated, but I can tell you in our market, typically a seller will like to see 30 days or less,
Okay.
Especially if it's vacant.
Yeah.
If it's a vacant home, that seller's going to want to have their funds as soon as possible.
Sure.
And
Yeah.
so going back to what you were talking about with those big banks, I think I can count on one hand how many times a loan with those big banks has closed on time. Certainly sometimes they don't even close. And so that's just too much of a risk for my clients. And like you said, I have tens of clients that actually work with those banks and that might even get employee incentives and do not go with them because there's just not a lot of communication. And in such a short amount of time, in such a strong market, that is something you cannot risk is no communication. So.
Gotcha. Hey, listen, we have another question. This is a perfect one for you because I know you do a lot of business in the South Carolina market. We have an employee of that Wells-known bank who wants to know about the tax savings in South Carolina. And they hear, hey, there are some advantages to having a senior on. I know, and I'll add to that, I know there are advantages for sometimes for veterans if they've got any percentage of disability and things like that. So talk about taxes in South Carolina in general and anything more specific as a strategy that may be available to people.
Me?
Yes.
Okay. So in South Carolina, 10 minutes down the road, of course, taxes are, if you are tax sensitive, it is less. You know, North Carolina is honestly not that bad either. Depends on what market you're coming from. But it is a little less. And it does matter which county in South Carolina. For instance, Lancaster County is extremely low, but the schools aren't super. So there's a give there.
Right.
And Fort Mill is York County, and taxes are less than Charlotte, the city of Charlotte and Met County. But because the Fort Mill school zone is so strong, you're going to pay more certainly than Lancaster. So it is county specific.
Yeah.
This gentleman, let's see, he's talking about the advantage to there are tax incentives for seniors. It depends on what if it's a senior neighborhood, for instance, like a Del Webb neighborhood or a 55 plus, there are incentives. As far as being on the contract, that's something we would probably want to make sure with an attorney that you could cash in on that tax incentive. If there's one person that is a senior and one person that's not, the state isn't stupid, so we want to just make sure that that's something that can happen. That's a little bit out of my lane.
Yeah, no, I understand. Look, I can tell you, we have some clients right now that they're both veterans, and they've both got some rating of disability from the VA, and because of that, I know in Lancaster County they I think they don't even have property taxes. What we just learned, I called the county, zero. It was
Zero property tax.
that. So it is, very specific. So if you've got questions that are really specific to that, we may be able to help you. We may not, but at least we can guide you where to call to get the answer for your specific question in the right county and things like that to gather that information.
Yeah,
So,
Tracy, I can make a call to one of the attorneys I know in
sure.
Fort Mill and answer that for
Sure.
you.
Yeah, that's perfect.
Well, typically we have Josh on the call.
Yeah, he's not here tonight. He's out. He's not here from Costner Law. So unfortunately, we can't just unmute him and have him answer. But that was a good point. Hey, Brenda, question came up about student loans. Talk to us about student loans and how that impacts it. I know you love that question because it's so simple, right?
Right. So it isn't actually, and it's even different now than it would be at any other time, probably in our lifetime, because all student loans are in, forbearance that was extended again till December by the president with his executive order. So student loans that are in forbearance are kind of looked at differently, or could be looked at differently than they would
Maybe
have this opportunity. So it is sometimes, actually, I've found that almost on every occasion, it is actually helping my borrowers qualify a little bit more based on the rules around how we look at student loans that are in forbearance.
So I think the moral of that story is if you're thinking about buying and you have a student loan, you might
Want to do it before December.
accelerate that search because it may be advantageous. Not
Yeah.
necessarily, but it might be, right?
It might be. That's exactly right. It might be. And
You
because
shouldn't
because
run
they're
out
so
of funds just for
different,
a reason. You could help.
because the student loan calculations for different types of loans is so different, it's best to just do it on a case-by-case basis.
Gotcha. Yeah. And also gift funds. I know when we talked about down payment, we talked about 3%, 3.5%, 5%, all the different down payments. What if some of that is going to be a gift from parents or family or friends? I mean, is that permissible? If you have a gift, do you have to have any of your own money, or can it be all gift funds?
It can be all gift funds, but it does have to be from, it can't just, it has to be a family member.
Okay. All right. Okay. So gifts are okay.
And not a distant cousin.
And what?
Just
And
leave off
not
the
a
word
distant
distant.
cousin.
Just leave off the word distant.
Yes.
But it can be a cousin.
Yes.
Okay. So yeah, and so just to recap on the student loans, it's just one of these deals where we were talking about this in the office recently. I don't know that we've had a single client come to us that has student loans that we didn't figure out how to get them qualified for a house. Does it become a consideration? Can it create some limitations? Yes, but most of the time we're finding that even with that element, we figure it out. And it hasn't really stopped people from buying. Contrary to a lot of popular opinion, it's really popular to read articles on the internet about student loans keeping people from buying houses. And listen, it could be the case,
Yeah.
depending on the circumstances. Most of the time it's not.
But the reality, I would say, is that if you're affording rent in Charlotte and paying your bills, like that, there's a good indication right there. Most of the student loans that, people are in are, have a payment that's affordable for them, and they have an income-based payment. And there's your answer, because renting in Charlotte is not cheap. So we've found many people that, and this is crazy to say, but we have actually found many people, and we've been a part of transactions where they actually are buying a great house, a house that more than meets their needs, and they are ended up paying less than what they were paying in rent here in Charlotte. So normally that would never be the case. Honestly, that's the honest truth. You would always, because you've got taxes, you've got insurance, you've got all these other things that come with buying a property. But the only thing that makes that work is that the rates are so much, make the math of the equation so different right now, and it increases your buying power and it makes it more affordable than ever. So that's the reality.
So that leads me to a question for Tiff. We talked about timelines and getting on the drip, right? So let's start looking, get familiar with the houses. My lease isn't up for 7 months. I'm going to buy in 7 months. But what if they find a house they really like next month? Okay.
Right.
We talked a little bit about how you handle a lease, okay? Not all leases are the same, but a lot of them have clauses, right? So talk to us about that.
Right. So I would say be aware of what that default clause is. If it's a 60 day
Early
heads up.
termination.
Exactly. And then maybe a 2-month payment. That could be easily negotiated in what's called seller paid closing costs. And so theoretically, you are getting money to pay for your closing costs that you would have had in your pocket. And that it's kind of like a wash. So that money that you were going to pay to get out of your lease is now being paid by the seller. So there's all sorts of ways that we can kind of get around that. Certainly if there's 7 more months of paying rent, it makes much more sense to have a home for those 7 months than throwing your cash to your landlord. And so, and that's always really been the case. But like you said, these rates are so awesome. And the fact that we can negotiate seller paid closing costs, it just makes more sense.
And you can, so that the whole point is when you do the pre-approval, if your lease isn't up for a while, it's actually not a bad idea just while you're getting your pay stub to pull out your lease. Let's just see what the clause is. A lot of them a lot of the big companies, it's right there. There's not it just tells you, usually it's the most common one we see is you got to pay 2 months.
Right.
And keep in mind, when you get a mortgage, Matt, we talk about the arrears versus in advance about.
Yeah. So when you're renting, when you pay your October 1 payment, you are paying for October rent. And when you're
first through the 31st of October to live there, is what you mean. If I pay rent on
Yes.
October 1st, it's to live there through the end of October.
Yeah. Yes. When you pay October 1 rent, you're paying for October's rent. So you're paying in advance. When you're paying on your mortgage, you pay your October 1 payment to your mortgage, you're paying for September's interest. The reason that's important is because when you're transitioning from renting to owning, you've got kind of that gap in between where you might get a payment break. And it actually, for a lot of people, that's important because let's say that let's use some real figures. You're closing in the middle of October. Your lease at your apartment is through October, so you've already paid that. So you're gonna close in the middle of October on the new house, and then through the last 2 weeks of it, move into the new house. Let's say. All right, so you are not going to have a payment on that mortgage until December the 1st. Right. And the reason that's important is because you get that gap. It helps with cash flow. It might help you afford down payment, pay for closing costs. It might be the thing that allows you to buy out your lease early. All these things, it is helpful. And so all these things you need to take into consideration. And that's one of the things we'll sit down and help you with. And that's why you have a good team that sits down and helps you work through these numbers.
Yeah, exactly. And Matt, someone asked, can I buy, if my first home purchase, can it be for an investment property to rent out? Is there a rule against that? Do you have to live in it your first home? Nope.
No, you can buy an investment property. Just realize that the rules for investment property purchase are completely different than the rules for a primary residence. You have to put at least 20% down on an investment property. It is uncommon for that to be your first property. A lot of people want to get into that maybe later on in life, but when you have no experience owning a home, a lot of people might not feel comfortable being a real estate investor. There's all these internet sites and all this marketing to people that want to get into that business, and certainly you can. But a lot of people are doing it, in a sort of natural progression. You might buy your first time home here with the idea that, okay, I'm going to buy this sort of starter home. I'm going to live in this house. And then maybe I'm going to hold on to that house. And instead of cashing out that equity and transferring that to my second home that I'm going to buy in the future, I might want to have the plan up front that, hey, rates are great right now. I've got this locked in at under 3% for the life of this loan. I might keep that as an investment property, save up my money on the side for that second home. That's a more organic way of doing it. The other thing that you should know is, that fundamental fact is that, investment buying has different rates. It has different terms. You have to put a lot more down. And during the COVID, during this COVID crisis, the pricing on investment properties is a little bit wonky also, and it's just a different set of rules. So, that's why you need to know that up front. But no, there's no rule that says you have to buy.
You can do it, but as well noted, it's different.
Yeah.
Yeah.
It's different.
Gotcha. Yeah. Okay. Well, that is, what if one would run out in a year? Oh, yeah. So I think you kind of answered this question. So if I buy a house now, I'm going to move into it, and then my job changes, and in a year I got to move. I could rent it then, and you convert it to an investment property. It ends up is different on your taxes and such like that. But yeah, you can convert from owner occupied to investment.
And,
just like
and
that.
when we use that word convert, there's nothing, there's nobody you got to tell. You
Oh,
know,
no,
Yeah,
when I-
it's your house.
you just
It's
move
your
out.
house.
It's your house. You own it.
it means you moved out when I say convert.
Yeah. Right.
Now,
No-
let me give everyone a counter example though. That does not mean that you can have a job here in Charlotte and then buy a condo in Fort Lauderdale and have that as your primary residence. That is not the way it works. The lender, the investor, Fannie Mae, like they're gonna analyze that situation. It has to make sense. So I mean, it has to be, as long as you're being honest up front and saying, hey, I'm gonna buy this townhouse or this home here in Charlotte. I'm gonna live in this property. What you do with it after the fact, that is your business. You own that property.
All right. I want to
So,
invite
One
our.
more thing. What if I've gotten I'm in a contract and I have a pre-approval that I provided with that contract with another lender, but I want to switch lenders before I close because they're too slow. Am I locked into that pre-approval? Matt?
No,
Tiff?
no. In
Does
fact,
that pose a problem from your perspective, does it?
It does not. In fact, you, as per the contract, you have 5 days to make loan application. So you can use a pre-approval from one lender, and then certainly go under contract, and then you just need to make sure you make a decision pretty soon after. But nope, you're not locked into you're not married to anybody.
Great. Brenda, I didn't see that question. Can you tell me, did I miss another one?
No.
Okay, so folks, listen, we're coming to the end of our time, but we want to make sure your questions were answered. If you want to ask another question now, please pop it in there. We'll do it. And if you don't have another question right now, don't worry. We're a phone call, a Zoom meeting, an in-person meeting away. We are accepting pre-approval meetings in person using social distancing and masks and such, but we do Zoom, we do them over the phone. We do it however you're comfortable with, and we make it easy. And in that time, we will sit down, we will answer whatever new questions you've come up with, and they'll be really, really specific to your situation. And so, don't be afraid to ask now, or we'll just catch it later. So we will be sending you the information that we talked about earlier with the links, okay? But there's also gonna be a survey where we really, really read these surveys. I promise you it's a really easy, fast survey. Learning what was valuable, helps us improve these every time. So please pay it forward to the people doing one of these events next time. Fill out the survey for us real quick. I am going to real quick share my screen again.
And I would like to also say, guys, it's an exciting time. It is fun. It is wonderful. There's nothing bad about this process. It's nothing to be scared of. In fact, it's the road to wealth. And it's your home. I mean, it's a place where you can make it your own, and for the first time ever. And it's an exciting, wonderful thing.
There's no better toy than a house.
Yeah, it's true. Tiff, I noticed some folks asked for your contact information, and you put it in the chat. We will also be sending out contact information for all the panelists in the email that you'll get in just a few minutes. So you will get that. And also, when you go to schedule a pre-approval, I want to remind you, if you get a pre-approval, you're going to get a $50 card to Legion Brewing. We want to support them, stay local, still have fun. But also, on the link you're going to get, there's a little button where you can go into our calendar. You just say, oh, I want to meet on Tuesday, or I want to meet 4 Tuesdays from now. Boom, and you schedule it. It'll update on your calendar. As long as you do that by the end of the business day, Monday, if you buy a house and use us for your mortgage, whether it's next month or next year, it doesn't matter. We will have you tagged with that promotion, and $500 off of closing costs applied towards your appraisal. So that makes a big difference in the home buying process to save every penny you can. And we're happy to do it and just help you through the pre-approval process. It's never too early for the pre-approval process. I think that our panelists made that really clear, and we enjoyed doing that, and we're quick about it. So watch your email for that pre-approval sign up. Again, thanks to the sponsors, Arch and Costner, Andy Bovender team, Tiff White, really, I think the best realtor in the city of Charlotte, and of
Easily.
course, the TruLoan Mortgage team. So thank you so much for spending
There's one
your
quick question.
evening with us going through this real talk about millennial homeownership. Yes, Brenda, you have
I
another
was gonna
question?
say, someone had one quick question. I was just going to answer.
Oh, yeah. Well, let's do it.
Yeah, so
Yeah.
someone asked, it's kind of on what we were talking about. They said, if I buy a house and live in it for a year and then decided to turn it into investment property, will my rate remain the same? The answer to that is yes, as long as you get a fixed rate, which is really all we're selling right now. So
Right.
Yes.
no matter what your rate is to begin with, if it's a fixed rate, it will stay the same for the 30 or 15 years that you have
Yeah.
locked it in.
Good strategy too.
Yeah.
I'll go back to the term Tiff said, it's wealth building. So absolutely.
Yes.
So, all right. Any
Thank
others
you.
before we go? All right. Well, thank you so much. Everyone, enjoy your evening. We'll be in touch soon. Watch your email. Thank you.
Thanks,
Thank you.
everybody.
Bye.
Bye, guys.